Great day, everyone. It's Trader Reg here for another exciting day. February 5th. Just want to take a quick snapshot, look at the market. Appreciate everybody joining me, everybody that's listening to this video. Let's take a quick look at the market itself, the S&P 500. S&P 500 is one of your favorite targets of the investors and all the big boys. They have host 500 of the top stocks in the world, and we're gonna take a look at what the market is saying right now. All right, so I'm going to try to make this a little easier for you. This is something that I look at a lot, but I'm going to try to see if I can get to a different type of charting. Let's do this. I'm going to start fresh from the top, and then we're going to add some indicators in. So if you just look at the market right here, this was the top here. So markets always move between support and resistance zones. Money goes in, money comes out. And in the midst of that, there's price action where money likes to hold and the investors like to jump in or jump out. So in this case, this is an area that you can see the high here at 485 as a strong resistance area, right? We broke out and then we traded sideways. Now we need confirmation to get a true breakout of a stock. Now you can see here this sideways movement, the upper half of this candle is very bullish, but we don't have any follow through to the upside of this breakout. So on all breakouts, you really want to get confirmation that you're going to go higher. This one kind of stalled and went sideways. And then it gave us this weak candle here with the shadow. That's a sign of weakness. Then it gapped down the next day. Okay. So that's just an example of weakness inside of the stock. So then you can see this is what they call a shooting star on this next breakout. Well, first let me go here. So then we pull back, the market goes lower, then it turns back around. This is a inside day here, or bullish around me, and then it pops up higher. Right here, we get back into the zone above here and close there, and we follow through the next day. So that tells you that the market's going to try to go higher, and that's what it did on the next following days. But on this third day of being above this breakout zone, you can see the failure by the end of the day. That was a little warning to, if you have profit, take a little profit off the table and then see what happens. Usually when you get this pattern, which is an indication of weakness, it's not necessarily a shooting star. This is more of a inverted, it's an inverted candle or a bearish. It's a bearish doji because the doji is at the bottom of the candle. It went up, came back down. There is a name for it, but I can't think of it right now. It's very rare that you see a lot of these candles where you have just a doji at the bottom and not a real body. The real body is an inverted hammer. It goes down, it turns around. It goes down, but closes right back above this area, which is significant. So if you're looking at this would have been on Thursday, there was a good chance that the market was going to hold and bounce up because it showed the resilience of the buyers right here. So you should have been buying the market here. Now, again, I don't give trading advice or investment advice. This is for educational purposes only. But if you're trading this Thursday afternoon, Friday, you should have been in this stock with a stop below this area here or down here, depending on how much time you bought in your option or if you bought the stock. Your stop would have been going below there, this old resistance area. Okay. Now remember, this is zones. So you got resistance here, you have resistance here. Resistance becomes support, boom, boom, support, it broke back down, gap down back below. It went down here to this area here, and this was very pivotal to whether the market was going to go lower or the market was going to go higher. And you can see right here, the market stopped right at this old resistance that became support. And you can see it tested 1, 2, 3, 4, 5, boom. Tested resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Broke it. And only went up to go sideways. It held, but then it gapped down right back into the zone. So the market was not ready to take off. But then you had this, what they call bullish Harami pattern, right at support. This inside day, they say, that can be very bullish. And you can see the next day, boom, up. That's your confirmation. And then, bam. And if you take these three candles by combine them together, that's a bullish Harami pattern, bullish Sasha pattern. If you take these three candles, these are a bullish Sasha candle, and it props up, boom, takes off, and then eventually fades to the sun. Now, here we go. Comes back down, right to support, it holds. So bam, market is now going to attempt to take out this high, okay, which I believe it should do it this week at this pace of what the market is looking like. But again, this is not a full chart. So that is a 130 chart. Let's go to the daily. The daily is very important. So you can see here, these levels that I drew on the inside, you can see the levels working on the daily chart. And you can see here, boom, boom, boom. This is the bull Sasha I was telling you about. You have a downtrend or down move, which is a gap down. The market comes out and take out the high, opens higher inside of this candle, and then takes out. That is a very bullish candle. Okay, broke out, came back down, popped back up, and we are holding this area. We need follow through more to the upside, but this thing is bullish right now. You should be trading the market higher until you break these levels, 489 or 482. So this could be a tough time trading right now because those levels are there, and they are not they're kind of tight. All right, you don't have any like 3, 4, 5 day movement, which we could be setting up for in the market and get above that 500, somewhere the market has not seen before. So it's gonna be interesting to see if this thing continues to do what it do. So that's the S&P. Take a quick snap look at the Qs. And again, this is just a recap of some of the stuff that's going on today. I'm going to start doing more thorough videos and breaking the stuff down a little bit more. That way you guys have a greater understanding of what is happening in this market. Qs, same thing. Look just like the S&P. Boom, boom. You can see how all of this is playing itself out between resistance and support. And that's basically how stocks work, but it's almost following S&P to the T. All right. So this is all good stuff to recognize and understand. On my next video, I'm probably gonna add an indicator so you can take a look at the indicators and see how the indicators can help you. So like the 20-day moving average is a very important moving average. So those are some things that we're going to look at using what we know and getting to know these things. So this gap is very powerful. Bam, gapped up. We got a pivot point on Friday. Boom. This stock is following through to the upside today, but very barely doing it. So, but it's happening. So we'll see what the last hour brings, and then we'll see what happens. All right. But again, I'm Trader Reds. This is just a quick, small update on the market. I do believe the market is trying to push higher. All right. That is my opinion. Please seek a qualified investment advisor, as I am not an investor. I'm not looking to sell you any type of securities or anything like that. So please seek that person who is qualified. All right. And again, this is for educational purposes only. Everybody have a great and awesome day. Thank you.